Adab, Salam, Vadakkam and Sasyakal. Hi guys, welcome to my channel. In today's video, we are going to talk about a Tata Group stock which has been a multi-bagger to many. It's called Trent and we are going to focus on its Westside business. What is really Westside? It's a fashion brand portfolio which it operates via a big set of retail chain via which it sells these brands products and makes money. In very simple words, that is what the business is about. So when we talk about Westside, it operates 214 stores right now, as is visible out here, and this number has grown consistently. But when we talk about the number of cities where these stores basically exist, that has grown somewhat, but has turned out to be stagnant over the last few years. That is 90. So it is pretty clear that the business thinks that they have already achieved presence in the core cities where they think such a business would make sense at these price points. So they are adding more and more stores in the same cities where they think there is enough demand. That is what they are about. But when we think about it, where are these new stores actually coming up? So when we look at India as a whole in different zones, we would basically see that the number of stores have quite risen in South particularly. So South was the second largest area almost 6 years ago, and it's in the top area right now for West Side. It had 35 stores there and it now has 72 stores. West basically has grown from 46 to 65 stores. Meanwhile, North has gone from just 30 to 38. So basically not much has happened in the northern area particularly. Meanwhile, when we think of the eastern sector, it has gone from 8 particular stores to 23 stores. So clearly a big focus has gone into building the eastern sector business. Meanwhile, when we think about it, if we go by sector, it would probably make more sense. The reason is in some sectors, maybe a single or two states would have driven the entire show, right? So let us go to the south sector first. It's clear that Karnataka has led the show, rising from just 12 stores to 24. That is doubling within the 6 particular months, 6 particular years that we are talking about. Meanwhile, Telangana and Kerala have also done a commendable bit, going from a collective 10 stores to 25 stores. Meanwhile, Tamil Nadu from 9 to 16. So a decent show out there as well. Meanwhile, when we talk about the western sector, Maharashtra has gone from 24 to 36 and Gujarat from 14 to 21 stores. But the key to note here is that Rajasthan had 6 stores, has always had 6 stores. So clearly the business doesn't think that more investments into Rajasthan make sense right now, because the cities probably are not mature enough or the per capita income per person is not really making sense right now for further investments. Meanwhile, when we think about the northern sector, it is very clear that all the new stores have been opened in Uttar Pradesh alone. In other territories, basically no major work has happened, no major investments have been made. Be it Punjab, Delhi, UK, or that is Uttarakhand, Haryana, J&K, HP, whichever you talk about it. When we look at East, well, investments have clearly gone into West Bengal, Assam and Bihar particularly, and Odisha of course. But if you look at Assam and Bihar, so Assam has gone from just 1 store to 6 and Bihar from 0 to 4. It's clear that business is clearly very, very bullish on the potential of these particular states. So that is what we get to take away from this. And when we talk about the central India part, MP has gone from 4 to 9 stores. So definitely a big sign out there that the business is pretty confident on the state's performance. And same for Jharkhand, from no stores to almost 4 in a span of just 6 years. So business is definitely showing confidence out there. So basically the takeaway is that there are some states which are not, there are select few states which are seeing much of the expansion happening, while most other states are basically not witnessing much investments happen. It's as simple as that. Meanwhile, what about the business, the growth? Because stores are okay. What are the business that is happening out there? So let us first begin by talking about the shrinkage ratio. Most people would not know about it. So let us explain that a bit. So shrinkage ratio in simple terms is how much of your inventory is basically lost. So say you have got a lot of shirts and say some shirts would basically go out in terms of theft. Some would basically get spoiled during user trials. Some would probably be affected by vendor frauds or manufacturing defects, and some would basically probably be affected by employee errors or administrative faults, right? So these directly hit the margins. The reason is when you sell a product, you make a small amount out of it, a small margin on it. But when you lose a product, you lose the entire investment made on it because it cannot be sold to anyone else. So this ratio, as low as it is better. That is the basic takeaway. So if you look at the numbers, shrinkage ratio for West Side used to be as high as 0.28%, and they consistently brought it down to 0.12%. It rose a bit and then again came down and currently stands at 0.18%, which is still significantly below 0.28%, right? Now, where does it reflect? As simple as that, margins. If you look at the margins, just as this number was coming down, the shrinkage ratio, the margins improved significantly from around 8% to 11%. That was EBIT margin, that is earnings before interest and tax. And if you look at earnings before interest, tax, and demonetization, amortization, everything, you would see the number has grown from 5% to 9%. This is a commendable growth out there. And after that, the business has sustained those numbers if you leave the COVID year aside. But what happened out here? Look at this figure. FY23, the margins increased to all-time highs, right? Why? Why did that happen? So basically, if you look out here, that is the like-for-like sales growth. The answer is very clear. The sales growth drove the margin significantly because the fixed costs, of course, do not rise that much once a store has been set up, right? But what is really like-for-like growth? So again, a bit of a definition for you. Like-for-like, basically, in terms of Westside, it is all these stores that are at least 2 years old, 24 months, because new stores take some time to catch up and get to a mature level. As simple as that. So something really happened out here, that the company grew its sales not as the usual 9 to 10% rate, but rather at 49%. In the previous year, it was basically recovering from COVID. But what exactly happened out here? 49% growth. It's pretty fantabulous, right? So there are multiple factors that drove this particular outcome. Number one, there was a 30% jump in the count of its loyalty program members, right? And if there is a loyalty program out there, is it really driving any improvement in the member performance? The answer is yes. If you look at the AOV, so the members saw a 16% jump in their average order value. In comparison to that, the overall Westside AOV grew by just 10%. So clearly members are shopping more. So the loyalty program is definitely working out in favor of them. The other thing is digital sales. So the digital sales basically grew 150% in FY21. That was the COVID year. Can be understood, COVID happened. But see what happened the next year. It again grew by another 74% out there, which is fantastic. And thereafter in the bygone year, it grew by another 24%. So this digital sales has been growing consistently and it now accounts for 7% of the overall revenues. And most of these orders are fulfilled from the nearest stores. So there is no additional warehousing expenses to be accounted for. And that is driving a big growth in overall sales as well as margins. So that is what we get to take away about the business. So I hope you like this analysis. And if you would like to see more of such work, do subscribe to the channel. We come out with such business analysis on listed companies every Monday, Wednesday and Friday at 6 p.m. And if you like this video, do press the like button and do hit the notification bell and share it across. Thank you so much.